The history of Only World Group Holdings Berhad can be traced back to 1984 with the establishment of a private limited company called Family Fund 𝗦𝗫 Berhad, founded by Datuk Khaw Cheng Keong. Fast forward to 2012, the company had expanded their business and changed their name to Only World Group Holdings. They are in the leisure and hospitality industry, where they engage in the provision of management service, while their subsidiaries are principally providers of leisure and hospitality services, incorporating the operation of food service outlets, water amusement parks, family attractions, and other services. The only country they sell to is in Malaysia. For more information, you can visit their website at www.owg.com.my. Revenue was growing until financial year end 2018 in consequence with the closure of certain resort and lesser sales volume due to MCO. On the other hand, gross profit was on a declining trend along the years. The falling gross profit had resulted their operating profit to decline as well. OWG incurred operating losses in both financial year end 2019 and 20 as the tourism industry was largely affected by the pandemic. Overall profit margins were downtrending, even during pre-COVID-19 as a result of higher costs. In addition to that, OWG experienced a large drop in ROIC, as not much returns are generated despite the increase in business expansion. Besides that, it seems their remuneration has been rising despite the fall in profit after tax, which resulted their remuneration to PAT ratio to rise as high as 50% over the years. OWG was a net cash company until financial year 2016 as they aggressively expand their business. This is further justified with their vigorous capex spending, which resulted the company to leverage on more debts. The company only paid dividend for 1 year. Makes sense since they are only focusing on business expansion. Their large capex spending had resulted negative free cash flow in financial year end 2014 to 18. Distribution of dividend for financial year end 2013, 14 and 16 is possible because OWG have a lot of cash sitting in their company. Overall, I rate their company 2.6 out of 6.4, which is about 40.6%. Personally, I feel that OWG had faced multiple headwinds even before COVID-19. Their poor financial performance also proved the large drop in share price over the years. After analysing OWG's 10 years of financial data, here are my thoughts. Number 1, I believe that OWG will have a short-term growth potential once the tourism sector is open for business. However, there are still many factors to consider, among others, the progress of vaccination, lifting of travel bans, number of international tourists travelling to Malaysia, and many more. Though one thing to note is their business profit margin has been declining ever since IPO as a result of the ever-growing in material costs, operating expenses, depreciation on assets acquired, higher finance costs, and so on. Despite the large fundraising from financial year end 2016 to 2019, the company was still unable to achieve better margins and ROIC, aside from growing their revenue and operating cash flow for a short period. Hence, this is something you may want to ponder on. And that's all, folks. If you enjoyed the analysis, make sure you smash the like and subscribe button. Comment down below if you have any questions. I'll be happy to get back to you. With that, I'll see you in the next one.